The media world undergoing some major shifts right now, from streaming success to stage fright to movie meltdown. Let's start with Nielsen figures showing for the first time ever viewers spent more time streaming than they did watching cable TV in July. It wasn't a wide margin, but it was still a win. 34.8% for streaming, 34.4% for cable TV. Let's bring in Ed Lee. He's media reporter for the New York Times and a CNBC contributor. Ed, great to have you here. Can't wait to get your thoughts on all of this. And look, it's obvious even the content companies, they're betting on streaming as their future.
Yes, that's been the bet for a while now, ever since Netflix sort of reordered the world. And everyone's sort of been, at first, dipped their toes, but then going full stream, I guess you could call it. So we've seen this story before. We knew this was going to be happening, right? I think this is an interesting milestone. They just sort of edged past cable. But the key to really the way to think about this is, this is a gradual shift. This is not like a thing where it's a flip of a switch and all of a sudden now everyone's watching streaming instead of regular TV. People will continue to watch regular TV, especially broadcast, given their hold over the NFL. I mean, they just renewed a media rights deal with NFL that costs like $10 billion a year. So people are still going to be tuning into broadcast and probably still some cable, given the sports that are still on there as well. It's more a question of how much sports is going to remain versus how much more, you want to watch everything else on all the other streamers.
It's a great point, because actually it was this summer in kind of the sports quiet period that I felt like our household made the switch. And even something, we were watching the Tour de France, and it's on Peacock, the NBC streaming service. Yeah. And next thing you know, we're on that and then watching other stuff. And it was like, wow, I felt, we can be dinosaurs, but I felt like, no, this is kind of, we've made the leap. And the sports test this fall will be a big one. I mean, Amazon will have NFL games. So I'm not sure how relevant. Exactly. Yeah, I mean, and those Nielsen ratings suggest that this is the future. Amazon's going to have Nielsen ratings and advertising. And even for sports, it feels like it's going to be all about streaming.
I think you make a great point. I think, to the extent that streaming is really, really winning, just in terms of hearts and minds, it's the sports. I tune into Peacock for Tour de France as well as a Premier League. It's huge on Peacock. The other streamers as well, whether it's ESPN Plus or, I think Paramount Plus has sports as well. Whenever I'm tuning into a streaming channel, it's going to be for the sports first. So I think that's where the main sort of draw is going to be. Everything else is sort of ancillary to that. Yeah,
and then I didn't even know there was going to be a Tour de France Femme, and then I'm watching that. I mean, it's just Anyway, it was kind of a fun experiment in the whole thing, but it's obviously more than an experiment as it looks like it's taking over the landscape. Speaking of the landscape, what's going on with MSG? We talked about this with Charlie Babrinskoy last hour, but a spinoff of Madison Square Garden, shares of MSGE are popping today after they announced they're exploring the spinoff of the live entertainment business that has the venues, entertainment bookings, and the licensing agreement with the Knicks, Rangers, and regional sports networks. 5.5% pop in the shares. Ed, what is this really all about?
Yeah, so I watched the segment earlier. I think Charlie's right. I think it's a response to investors not liking the weird mix of businesses that were in this. I mean, they split off the entertainment and the sports business 2 years ago, and the investors seem to like that. Now it's like, well, why do you have this weird restaurant and sort of Las Vegas business tied into this? Like, what does that really mean? Especially during the pandemic, when a lot of sort of live and hospitality things were just not doing that well. So fine, Jim Dolan, he responded. He said, okay, let's split this thing off now, and you have the restaurants in one corner, and then the other venues like MSG, as well as the cable networks, the regional sports networks, in the other thing. That's the thing they're spinning off. I think it's a smart move. I mean, if you're an investor, you want these things to be separated because they are very disparate types of businesses. At the same time, you then have to now look at, well, the media business is that much more naked, right? It's still sort of the bigger part of the business, but it is structurally challenged, right? Like regional sports networks, they were all the rage not too long ago, but it's getting harder for them to justify the high rates that they continue to charge the cable operators. So that's going to be hard going forward.
Yeah, no, it absolutely. That has been, it felt like it turned on a dime, really. And that brings us to what's happening with the movie theaters. The Wall Street Journal reporting that Cineworld, the owner of Regal, is preparing to file for bankruptcy within weeks now as they struggle to rebuild attendance following the pandemic. How much has, Ed, do you think AMC's meme stock moment distracted us from what's really going on in this business?
Right. I mean, this is a clear example. If you are if you operate movie theaters, you either have to be a meme stock or you file for bankruptcy, right? These are not great choices. And I think you hit the nail on the head. I think the whole AMC trade has sort of obscured the bigger picture, right? Which is that movie theaters, they're not doing so great. There are only so many Top Guns you can release in a given year, and even despite the strength of Disney and the Marvel franchise, there's going to be a lot of off years. And I think the whole sort of the culture of going to movie theaters has really shifted. I mean, people are staying at home or they're going to other things. They're not spending as much. There are still inflationary pressures. Going to the movie theaters was a cheap form of entertainment. Certainly cheaper than a Broadway show or going to like a theme park the way, that Disney has. So that was always the sort of the value of it. Now it's sort of like, well, that's not so cheap anymore. And, I think movie theaters are sort of at this crossroads of like, what do they really want to be? Do they want to still be that cheap entertainment? They probably can't charge as much as they used to, or certainly not at the concessions. Either that or they have to go high end. They have to make it like such a great experience that you're willing to shell out more money for it.